I'd like to introduce our next presenter here at the Planet MicroCap Showcase Toronto in partnership with MicroCapClub. Joining us right now is Ravi Sud from Golconda Gold.
Thank you very much. And thank you, everybody, for your time. I think this is the first time that Golconda is being presented to a forum like this in 6 years. So apologies if I'm a little bit rusty. Just one note before I get into the presentation, all the photos you see are, none of these are stock photos. This is our actual operation. We are a living, breathing mining company. And one of the themes I'm going to underscore in my presentation is that's a huge deal. There's a lot of great projects out there, great companies developing things that are going to turn into, very profitable, interesting businesses over time. But the gap between something on a spreadsheet and in a PowerPoint presentation to a living, breathing mine is huge. And that's really been a core part of our strategy and something I'm going to lean into in this presentation a little. Just very quickly on our capital structure. I think this is one of the most important parts of my presentation. It's a very simple capital structure. We don't have any warrants outstanding, pretty unusual for a junior mining company. Very few options. And we have a huge insider ownership, over 40%. That's principally myself, one director, our chief operating officer, and our immediate families. Another thing I'll point out about this is none of those shares were seed shares or free stock. Those were all shares that were purchased, and they weren't purchased all at once. They were purchased basically from 2011 to 2024 in the market. And for many years, our stock was, moribund. No interest in the gold sector, no interest in our company. And myself and other members of the management team, we believed in it, and we accumulated shares year after year. And now we own over 40%. And now things are starting to go our way. So it looks like a good investment. For many years, it was a very difficult struggle. From a cash perspective, we now are in a net cash position. Looking back, a lot of people highlight, well, your stock has gone up a lot. Our financial condition is very different than it was even 12 months ago. And it was a combination of two things happening at once. Our production really starting to take off. That was the culmination of years of investment. And of course, the gold price moving. And with that happening, both those factors at the same time, we went from being in quite a bit of debt to paying off all that debt, and now going into a huge cash position coming into 2026. Just very briefly, we have two assets. One is in operation. The second will be in operation shortly. Both of these were purchased by Golconda as past producing mines. So what I alluded to at the beginning of the presentation, that huge chasm between a great project that looks fantastic in the spreadsheet, looks fantastic on the PowerPoint, and actually being a permitted, built, functioning, successful mine is enormous. And for me, as I started the first part of my career, the first 15 years, I was in the investment industry, and a lot of my focus was on natural resource companies. Seeing the struggle between where those companies with the great projects on the slide deck to those trying to actually build that mine, I could just see the value there of actually being on the other side of that gulf, being fully permitted. That notwithstanding whatever rhetoric is put out by the current administration, it is still very hard in any jurisdiction to permit a mine, finance it, and actually get all the gremlins out of the system. It's huge. So both of these were bought as mines that were perfectly good mines and that had too much debt and hit a soft spot in the commodity cycle. And we were able to buy them for what I would say pennies on the dollar of invested capital, but also capturing the value of all that time that goes into permitting, construction, and actually making it a living, breathing thing. So South Africa is the one that's in production, Galaxy Gold Mine, we call it, and Summit in the United States, that's going to be in production in Q2 of next year, so very soon. So why Golconda Gold? What's interesting about us in terms of attracting your investment? First of all, if you have a view on gold, there are 10,000 different stocks and investments to choose from, and all of them, if gold price is rising, all of them should benefit in some shape or form. But we are actually producing gold. So every day we're benefiting from that gold price, and we're generating more profit. We're improving our balance sheet. Our financial condition is improving. So we're not just benefiting from increased or improved sentiment. and improved possibility of building a profitable mine, we're actually literally financially benefiting every single day. Second, we have a lot of organic growth built in. We are quite a modest producer. This year, we'll produce just over 10,000 ounces of gold from our Galaxy operation in South Africa. That will approximately quadruple over the next 4 to 5 years. We get asked a lot of questions. Can we do it faster? It is possible, but this is the lowest risk, most orderly, very well planned way of doing it. We have made almost all the key capital investments to facilitate that growth. We don't have to raise any money. We don't have to make a $20 or $30 million investment internally out of our cash flow. We do have to keep developing our underground mine, but our mill can handle that volume already. So huge internal growth there. Also bringing on our mine in the United States adds another 1,000 ounces a month. So we're looking at going to 5x our current production over the next 4 years. So huge internal growth. Don't need to acquire anything. Don't need to permit anything. Don't need to finance anything. Finally, our alignment with shareholders. We're not perfect. We've made a lot of management errors and mistakes over the past 14 years of this company history. But you can be sure that we're doing whatever we're doing to try and create long-term value for shareholders, because that's how we're benefiting. And it's not just me, it's also our chief operating officer and other board members. So really strong alignment, which, I'd be amazed. I'm not aware of any other company in the sector that has this. Really just a function of that 10 years of difficulty that we grinded through. A little bit more detail on Galaxy. This is a really historic, interesting asset in the global mining context. This asset has been in operation in some shape or form since 1871. So debatably, it is, whether it's exactly our ore body or one of the ones that are on our property, virtually the first European-built gold mine in Africa. So gold's been mined in Africa for several thousand years by various civilizations across the continent. But in terms of Europeans coming to Africa and in the modern era and building gold mines, this area was the first place that it started. So huge history here. We also have a huge resource. So when we took it over, we had it was just about 1 million ounces when we bought this in 2015. We've upgraded that to 2.4 million ounces. There's a lot more gold there. We will be mining it at in the 40 to 45,000 ounce a year range in the next several years. We therefore have a very long mine life, and it won't stop at 2 million ounces. So this mine has the potential to be producing well beyond any of our lifetime. So hugely long-lived assets with Galaxy. It's 21 different ore bodies. We're only currently mining 2 of them. So yeah, we could expand further. That is a natural question. Why aren't you mining more? Again, this is risk management. It's financial management. We've put in years of investment. We've gotten to the stage. We're now at the stage where we're generating actual free cash flow. And you don't always, this worked out for us. We timed it. Our production started going up just as the cycle started going our way. That, I'd like to say we planned that. Obviously, we didn't. But let's not look a gift horse in the mouth. So we're going to take that cash and not necessarily reinvest it all. I see the merit to it in some cases, but there is also merit to improving your balance sheet, returning cash to shareholders, and also diversifying your risk as an operator. Just a few photos. I'm not going to dwell on these too much, but again, this is, underground mining is kind of a slow mission. You have to do a lot of work to get at the ore bodies. And then once you're in them, you have the potential for a very long life mine. And that's where we're at now after years having gone into putting the processing infrastructure in place and adding to the existing underground infrastructure that we inherited and building it out to what we have today. Financials, it's very hard to figure out what gold price we should use when we're presenting to people. So somewhat arbitrarily, we're going to use $3,000 today. It's obviously quite a bit higher than that. You can see in 2025, so just this calendar year, we're generating, just Galaxy alone is generating quite a lot of free cash flow. This is US dollars, of course. In fact, because the gold price has been much higher than 3,000 for Q3 and so far in Q4, you can assume that the number will be quite a bit higher than that. And you can see in 2026 and beyond, that number just continues to go up. Again, we don't need any permits. We don't need to expand our processing capacity. We don't need to acquire anything. This is just us on a very measured basis, continuing to improve our access to our ore bodies, open up new faces, and send more volume to our existing mill. All very manageable and doable. And lots of upside. You can see at the very bottom row, the declining all-in cost, the AISC measurement. Sorry for there's a typo there. It should be AISC, not ASIC. But that's really a function of the fixed cost being amortized over a larger number of ounces as we grow the production base. Summit Gold Mine, this is, I think, really important to us for a number of reasons. This is a similar acquisition. We bought a company in the United States. Nothing fundamentally wrong with it. It carried a lot of debt. Itself, it had over 100 million US market cap when it was a listed company. And it also had over $50 million of debt. So when the commodity price started to plummet in 2013, they just weren't in a financial position to survive that. So the stock plummeted, the company went into a restructuring, all that debt was wiped out, and it sat for years. We bought it sort of during the tail end of COVID, 2021, and we were able to get it, I'd say, for pennies on the dollar. We paid $8.25 million for it. Why did we get it? Number one, small. So it's kind of in a who cares bucket. No major or intermediate's going to care about this. Number two, it's underground. So a lot of that skill set has been lost, particularly in North America with the focus on larger open pit mines. Our team is primarily South African and we're all underground. So very comfortable with that. And finally, it's a little bit geographically isolated. It's in the United States, but it's in New Mexico. It's closer to Mexico than it is to Albuquerque or Santa Fe or Tucson. So it's far from everything while still being in the United States. But for us, it's a diversification to a much better jurisdiction. And it was another acquisition where we paid pennies on the dollar. Like it would cost you many multiples to reproduce what's there. The other thing I'll highlight, and I'll sound like a broken record, is if I'm not managing to maximize the number of ounces, and what if I'm not managing even to maximize my net present value, whatever that means to me as a shareholder, and I'm instead maximizing what cash flow can I generate while putting out the least amount of cash and taking on the least amount of risk to get there, this is the best deal I've ever done in my career. Because the startup capital to put this back into production is under $3 million. So it's small. It's never going to be that big. But I don't have to raise any money. I'm not diluting myself or anyone else as a shareholder. And the operating risk is very low. It was in operation, producing. The mill's in great shape. I don't have to do much there. And we're able to put it into production without raising any money in the equity market, not borrowing any money, and not really taking on a complex operation or making any bets that we can achieve something. This one, unlike Galaxy, has quite a short mine life. It's 7 years. Still, I'll just go to the financials. Very profitable at $3,000 gold. If you look at the free cash flow line, you see the dip of just over $2 million in 2026 and immediately paying back in a big way in 2027. This mine life can be extended dramatically. So why do I say that? This mine was built in 2010. It was done based on studies in 2005, 2006. The geological work predates that. And so the modeling was done at $600 gold and $14 silver. We are now obviously at multiples of that. Even with the existing ore body, that resource can be expanded substantially. I don't have any compliant numbers that I could talk about, but just intuitively, you can see how that a huge amount of additional ore is going to be economic. Moreover, New Mexico is not a favorable place to permit anything. We are the only gold and silver mill, independent gold and silver mill in the entire state. There are small gold and silver mines going back to the 1800s. You just drive down the highway and you can see them all over the place. There are tons of opportunities for us to increase the production here. So again, me getting leverage for a very tiny investment. I have a permitted mill and I have permitted tailings. And just to underscore how difficult it is to do that in a state like New Mexico, our mill is 50 miles from the mine, which is an unusual setup, not ideal. The mill was built there because during World War II, there was a copper mine at that site. We still have a 1940s vintage head frame and shed, and the entire site is built upon the historic tailings from that copper mine. So it was a highly disturbed, using the environmental sense of the word, a disturbed and contaminated site, and they were able to permit a mill. Not easy to do that. So anybody else producing gold and silver in Grant County and Hidalgo County in that region of New Mexico, a great opportunity for us to toll mill it for them, because even if they could permit a mill, it's going to be, sort of 5 years for them to do that. So huge opportunity for us to increase the production here, increase the mine life, and do it with almost no capital. Next question somebody might have, so are you drilling yet? Answer is definitely no. So we have, again, as you've heard from me already, we'll be doing it out of the free cash flow from this operation. So we looked at starting that in 2027. So we want to make sure this operation is washing its own face first. A little bit more detail on the expansion opportunities there. Sorry for the font, but here's what we look like on a consolidated basis. Again, this is $3,000 gold. So if you're, pick your price, you can sort of do the math on every $1,000, what that would do to us. But next year, looking at producing 20,000 ounces on a combined basis, and at $3,000 gold, operating cash flow of $27 million US. So, like I said, our stock has moved up a lot, but our financial condition has changed dramatically from the confluence of those two factors. Our production starting to ramp up at the exact same time that gold price moved higher. So looking at 2026, again, this is months away. This is not fantasy for us. We know exactly where in every ore body we're mining to get those ounces. All the capital equipment's in place, all the people in place, all the permits are in place. We're trading at less than 3 times cash flow for next year at $3,000 gold, never mind 4,000. So notwithstanding the fact that our stocks moved up a lot, there's still a lot of value and a lot of potential there. And then, it just goes from there, obviously, as we increase the production. So tying it all together, our value creation proposition. So number one, and by a long shot, is self-funding our continued ramp up in production. So getting those ounces up from 10,000 a year to over 50,000 organically over the next 4 years. Number two, and a big part of number one, is restart at Summit, gets us into the United States, changes our perception in capital markets, does legitimately de-risk our operation with a better jurisdiction. Number three, and this is a maybe, and really just a function of where capital markets are at, but we will look at spinning out Summit to shareholders as a standalone US-only gold and silver producer once it is profitable. If the market isn't there for that, if that isn't a huge value creation exercise for us, we won't, and we'll just keep all the cash flow in Golconda. That's not the worst thing in the world, but it is something that we've already discussed with bankers and would certainly consider doing if the market conditions are right. And finally, the natural question when I show those cash flow numbers, what are you going to do with the cash? So the baseline assumption is, and I'm fond of quoting my mother on this, is often the smartest thing to do and almost always the smartest thing to say is nothing at all. And that's our base case here with Golconda, is we're not going to, we don't need to maximize ounces. We don't need to go out and do anything crazy. If we can't find something that has a similar return profile to it, to what we did with Galaxy and Summit, and to be honest, that's hard because we're now in a bull market. Everything's more expensive and expectations are much higher. We'll figure out ways to return that capital to shareholders. So yeah, depending on where our shares are trading, that would be more looking like share buybacks. And if it's if the shares are lower, the higher the shares are, it looks more like dividends. And either way, I could say I'm the biggest beneficiary. So I'm the largest shareholder, and you can safely assume that rightly or my decision may be right or wrong, but it'll be designed to benefit myself as a shareholder and everyone else who's in the same bucket as I am. So with that, thank you for your time. Appreciate the audience. Sure. So yeah, good question. Like, who are the people running it? What are the operational risks? So if you looked at our operational track record for the last several years in South Africa, I would say it would appear poor. And the main reason for that is we've gone into it and frankly, we've been undercapitalized. So there's been a whole series of decisions that we made because we were managing to cash. And anybody in the industry would say, well, you shouldn't have done that. That's a mistake. You've underinvested in that and so forth. 2025 has been a year of correcting that because we've generated the cash and we're still catching up on that. Like, I'll give you an example is our equipment fleet is highly with 7 different vendors. So we have to stock spare parts for 7 different equipment manufacturers. Like, we're talking drills, trucks, loaders. That's not optimal. Our mechanics aren't specialized in any of them. They have to know how to fix 7 different vendors' machines. So our availability has been very poor, below every industry metric. All those things we're improving on. I could say it hasn't been because our people are incompetent or unable to manage to industry averages and beyond. It's because we've been undercapitalized. So now we're starting to see that our production's going up. All our KPIs are going green, and they're tracking quarter over quarter. Everything's going higher. So we're seeing those catch-up investments working. So that's in very good shape. And South Africa is basically the best mining people in the world, like, period. They just figure out how to get it done. New Mexico, that's our single biggest challenge. I said we have no financing risk. We have no permitting risk. It's HR. We have search out for several positions. We need to hire 22 people over the next 6 to 7 months. And starting with the general manager, we haven't hired. We have maybe a dozen people in the hopper that we're interviewing. So we're going to try and land somebody. It's not easy because it's a small operation and it's geographically remote. But there are people. Freeport-McMoRan has 2 very large copper mines in our vicinity. So there's lots of opportunities to pick people out of those and just say, okay, different paths in your career or your life here. You can be the boss of this small mine and grow within Golconda and have that sort of opportunity in your career. And that's mainly what we're trying to do, is pick people out of there. The good news is we don't need mining, like guys on the mining side. It's just processing and admin. And those are lower skilled positions, particularly because we have a simple processing facility. And there's high unemployment. New Mexico is not in good shape for the most part. So lots of people looking for jobs. The reason why we don't need mining people is we're using contract mining. So it's very expensive, very good margins for contract miners now, but it eliminates that HR risk for us. It takes out that, the capital requirement for buying our own owner mining fleet and execution risk. I'm now pushing into contracted KPIs on my contractor. So for all that margin I'm giving up, I'm getting risk management in return. Sir.
To the political risk in South Africa. I would notice, just a month ago, South Africa president went to visit the White House, Donald Trump. And then there's some people text a bit, like Elon Musk, say, South Africa, they kill the white farmer. So who are the Canadian companies? So is there a similar risk?
Yeah. So the question is like political risk in South Africa. So I've a lot to say on that one. I'll try and compress it into 60 seconds or less. I spent a lot of my career working in Africa, Congo, Liberia, mostly. Much harder places to do business, physical safety, logistics, political risk. And South Africa has a pretty poor reputation, and I think it'll always affect our stock, but you have decades of mining history, and even in the post-Mandela era, post-apartheid, you have really no history of taking assets away from people. So crime rates are high. There's always a lot of noise, but I could say, like, I drive from an international airport to our mine in 75 minutes, all on paved roads, which are perfectly smooth, no potholes. There is a KFC and a McDonald's in sort of 10 to 15 minutes drive from our mine. Not that that's a proof of safety or civilization, but it just underscores, like, we're not in some remote, crazy location somewhere. It's pretty simple. The other thing is like, you're anywhere else in Africa, you're trying to get all your equipment in and your skilled people in. All the people and equipment are coming from either China or South Africa, and in South Africa, you're at the source, right? So like we're sourcing stuff. We're not buying anything other than stuff that we import from China, which is a port 200 kilometers away from us. Again, paved road, all works. We're using all South African people. We don't have any expats. So it's much easier. So it's definitely got a bad rap. And there's like a bitterness from the small white minority that was, 4 million people who, it's not the same deal anymore as it was 30 years ago. I have 3 brothers that were born in South Africa. My mom lived there, and it was paradise on earth for them in the 1960s. And it's a different situation now, but it does function. So I don't lose any sleep over a political risk. It's certainly not of losing our asset. And stuff like logistics that are hard elsewhere in Africa are actually or elsewhere in Africa are very easy in South Africa. Yeah, so they are we're kind of in a mountain range, so we're about 1,000 meters above sea level. So we're not those deep or ultra deep mines, but naturally it's underground, so water gets in. So we have pumps. That was another example of something very simple, which cost us is like we're frequently running out of pumps. So pumps break down, and we didn't have enough pumps in stock. It's like a $12,000 item to for the pumps that we use to evacuate the water from underground. And there's several occasions where we had all of our pumps had broken down and we didn't have a spare. So now, just again, we're in a better financial position. That doesn't happen. That's just a normal part of underground mining. We had a serious flood and a landslide 4 years ago. Didn't really cause us any serious harm, but we built berms and spillways. It cost us thousands of dollars to do it. I mean, we're a mining company, so we have our own ability to dig holes and tunnels and things. So it didn't cost us very much, and that's added another degree of protection for us. But it's a normal course problem of underground mining. It does happen. Great. What last question? Yeah, so you would have seen our cash flow actually dip in 2027. We started this year with tax on carry forward. So we're burning through those previous story much faster than thought. So we're actually moving through them to next year, which is bad because if you start paying tax, that's good. That means we're actually generating profits. So it is what it is. So we're becoming a better corporate citizen, but we're through all our tax losses. We're going to question the last presentation on return on equity. It's actually a really good question. It doesn't get asked enough. Our business has been negative until this year. Next year, we'll be over 100%. But that's kind of the nature of it. Invest, and invest, and then the confidence of Bitcoin. So they did to go.